I don't get why people are so frustrated by this. Like, this is pretty good as a trader. We're getting a lot of volatility. Every day there's like a different opinion that's completely opposite to the one that came prior. And we're just moving up right now. The S&P 500 has broken another critical level. We're going to get to how this impacts Bitcoin very shortly, because that's the most important thing we're going to be covering in this video. And if you're excited for it, do me a favor and smash those likes up. But what we're seeing right here with the S&P 500 is it was previously finding resistance right here a little bit, and now it actually managed to break above this level at 5,400, and now it's kind of trying to get back up there again, which I think is really interesting. But if we go ahead and measure this from the absolute low that the S&P 500 set up to today, it is up now by 11%, and accordingly, we're seeing Bitcoin do quite well today. It's actually swept the previous high, so it's continuing to outperform the S&P 500, and it has done so since the S&P 500 took the shit that it took and dropped down to the previous all-time high. It's been doing this ever since then, which I think is absolutely fantastic. Really, really good, strong sign for us right here in this market. And Bitcoin is now going to be approaching some very, very interesting zones. So what I want to do is I actually want to throw the fixed range volume profile on this chart, and just kind of look at what some of our important levels in this range are going to be. And look at that. We've got a point of control sitting right here at about 84,250. This, I think, for people that are interested in going short, is going to be one of the most obvious trades here in this market right now. Something that looks a little bit like this. It's clean. It's a 1.5. It's 1.5 risk. It's 2 on the risk to reward, which is definitely not good. And I think, one of the unfortunate realities of this market for some time now has been that we're not producing stellar trading opportunities. We haven't been getting stellar trading opportunities for quite some time. I think the last one that we got that was really good was probably this back test right here. And this was obviously very, very, very obvious that, the market might kind of got a bit of a rejection from there. I'm seeing something similar over here, though. And I think that it could be a good opportunity. We'll get to that a little bit later on. But those of you that are interested in trading these markets, whether it's anything on Bitcoin or a different coin or whatever, the best exchanges to trade are linked in the description down below, and they are giving you a ton of free cash to sign up. Obviously, you can sign up. You can Google it and find many, many more exchanges. They're all basically similar. You just get different liquidity and security. But these are some of the best ones I found. Check them out. They've got huge bonuses when you start trading using these links down below. You're going to get free money to throw back into the market, and if it's free money, it almost doesn't matter what happens, right? So I don't know, different people have different perspectives, but check it out. And Bybit is also running a very, very cool liquidity shield trading frenzy, where basically if you have any slippage, that is going to be covered by them up to a certain amount. So check it out. Check it all out if you're not from a restricted region. Really, really cool stuff there. But bringing it back to the video, this is a short that I think is interesting. I might be looking into it. I don't know. We'll see. I mean, we're pretty close to it, so I'd have to make a decision quickly. But I don't really like to rush into these kind of things. And there's a few other ways that I like to kind of make these decisions. One of the other ways, I don't know why I say this. This is like kind of one of my secrets, but fuck it, here we are. Is if we kind of get the rejection, we might end up kind of going like up here. And then when this thing kind of turns, I know immediately where to put that stop loss. I don't know why I say this stuff publicly sometimes, but because the problem is, like, you guys can listen, right, and you guys can kind of like learn from this a little bit, but then somebody else is going to rip it off on YouTube and it just goes mainstream. Anyway, that's okay. I have no shortage of very, very cool ways to play these markets. And really, the biggest skill, we were actually covering this on one of the recent videos or live streams. Make sure you're subscribed so you don't miss out on this stuff. Like, this channel is not just about analysis. I want to make this very, very clear. And you guys can tell if you've been around for a little bit. Our primary objective is to have very, very good, sober, realistic, objective analysis. But as a trader myself, for me, it's much more important than my analysis that I'm actually making money. Okay, and that requires me to trade. That requires me to put my capital at risk. And because of that, we can actually have quite realistic conversations with each other. Because it's not like it's not something different on this YouTube channel. So that is actually pretty good. And for me, what that means here is that this is still an interesting opportunity nonetheless. And of course, in terms of because this is a big thing, that the game theory. I know a lot of you guys are going to be interested in the kind of game theory of trading. One of the common theories is that the more people that kind of use a certain strategy, the less it's going to be useful. It becomes a self-fulfilling prophecy, but then afterwards it just kind of becomes obsolete. That's true. Like, that's a really common phenomena, and we're dealing with a lot of consequences of that right now. One of the most obvious consequences that you are going to be very intimately familiar with by now is the fact that Bitcoin fakes out all the time. That is a function of people trading breakouts so often. And so it just doesn't work anymore. So, these things do change, but by nature of this being a trading focused channel, what I'll tell you is that doesn't really matter if these things change, because it's always changing. It's always kind of, a market that you have to adapt to. And it's really only the people that can adapt. I think this is a really big point, and I want to make this very, very clear before we continue on with the core of this analysis today, ladies and gents. People can do incredibly well in the market at any given time. But what happens for a lot of people, this is so important. Get your notebook out, because I guarantee this is you if you've had success in trading before. What people tend to do is they'll make a lot of money in a certain market environment. Call it April 2025. And they will call it April 2024, even better. They'll make so much money in that market. And it will actually, it's one thing to perform well as a trader. It's another thing to have money, okay? It's another thing to have enough money to buy a car or repair some stuff or pay off some bills or whatever the case may be. That's going to get to your head, okay? Especially if you didn't have money, especially if you're new to the game. Guaranteed that will get to your head. Very, very few exceptions, okay? If you're an exception, then good for you, but that's not normal. And because of that, people will tend to assume that when the market moves on, and their strategy that worked in April 2024 does not work so well in June 2024 or September 2024, when that happens, those people are going to struggle to adapt. Why? Because they kind of peaked, right? Like, it's like, imagine somebody that peaks in high school, right? And then their entire career, or in the military, right? Someone that peaks in the military, the best thing that happened in their life was being in the military. If they spent enough time being a civilian afterwards, some of them, not all, but some of them, will wrap their entire identity around being in the military, or wrap their entire identity around being the popular kid in school, for example. This is the exact same thing. It's just on a shorter time scale. It's just a common phenomenon. It just happens to people at psychology, basic psychology. And what that means is that if you do not always make yourself feel like a student, and by extension, if you do not always prepare yourself to be able to adapt to the market in its current conditions, you'll never be able to make profits consistently across a long period of time. That's why it matters a little bit less about kind of things changing. Because the thing about things changing is that if you can detect that quickly, you're going to have a really big edge, and you're going to be able to make profit for a really, really long time. So that's pretty cool. That's a really, really important thing. And truthfully, it needs to be a primary consideration. A lot of people, they come into these markets, because I've spoken to a lot of traders, man, since I've been doing this for 8 years. And a lot of people come into these markets, they're busy, they're doctors or whatever. Maybe they got a nice job, maybe they have a job that they're kind of working towards something else. It doesn't really matter. The point is that a lot of the people that have something else going on in their life, maybe family, maybe a job, maybe something else, they want to get into the markets, spend a little bit of time on it, make some money and walk away. And in my experience, that is only going to work if you're dollar cost averaging and investing and not looking at the charts. Okay, that's the only way that that's going to work. If you're trying to do something even a little bit more aggressive than just dollar cost average investing, you're probably not spending enough time learning what you're doing. And by extension, you're probably just going to end up giving money to somebody who knows what they're doing a little bit better than you, right? And your excuses are not going to count when your P&L is negative, are they? So we got to be real about this stuff. If that is the kind of thing that you actually enjoy hearing about on this YouTube channel, then definitely make sure that you are hitting up those likes and subscribed. And we've got a phenomenal one-to-one program here. It is highly exclusive and expensive, but it is very, very serious, and the results that we've had are incredible. Absolutely everybody has had phenomenal results that's ever joined this. It's not going to stay that way. There's going to be a fuck up at some point, but so far it hasn't happened. So check it out if you are interested. A member of the team will reach out to you. All you got to do is reach out on this link down below. But let's bring it back to the market now and talk a little bit more about this analysis. So resistance right here at about 84.3 is absolutely beautiful. I'm going to go ahead and drop this right here. And I'm also going to go ahead and make a kind of, a box that represents this zone, because it's more of a zone than just a straight line, isn't it? And what I'm going to go ahead and do is actually make this a little bit more of a transparent box as well. Because I don't really want to stress this level too much. I mean, it's an interesting level, but, I'm going to leave it there. I don't want to call it more than interesting. I don't know what color to make this. Let's go for that. And so, that's going to be a potential zone that Bitcoin could kind of struggle in a little bit. We're kind of in it right now. Obviously, I think this is going to depend on the S&P 500, but, there's not too long left. About 2.5 hours, so there's a little bit left. If the S&P 500, kind of manages to get up to this level, then that would probably take Bitcoin to break its current resistance that it's at, and that would also lead Bitcoin up into the top of this range at 88K. Now, if we're able to get here, then the likelihood that Bitcoin bounces off this level increases a lot, okay? Right now, see, before when we got to this level, take a look at this. This is really, really interesting. Before when Bitcoin got to this level, it just dropped down, right? And I think there's a pretty clear reason for that. I'm wondering how many of you guys can pick it up. Just let me know in the comments section. Pause the video and just let me know. This is a really interesting, like, skill test for yourself, but drop it in the comments. It's okay. Take a bit of accountability publicly. It won't hurt you. And just let me know. Pause the video here. But to kind of give you my answer, what I think it was is just looking at this kind of support level. If I just kind of identify the support level as being like, let's say here, like if I want to get super, super precise about it, then it means that Bitcoin managed to rise up by about 2.8%, 2.9% above that support level. So by a little bit, but not clearing that kind of 3% kind of typical margin that we're looking for to confirm whether this is a fake out that's going to drop back down, or whether it's a breakout that's going to continue going up. Now that's with the most generous kind of draw of support that we're at about 2.9. But if you're kind of drawing it from the top of the box, for example, it's even less, right? So I think that's important, because if you're not clearing a resistance level with enough margin, then the likelihood that you come back down is quite high. On the other hand, just view this from a psychological perspective. On the other hand, if traders understand that Bitcoin's managed to get all the way up here, they're going to be a lot more interested in defending this level if it comes back down here, because it now means that we're back in the same range that we were in before. And I'd like to remind you that this is actually very, very normal for Bitcoin. This is something that Bitcoin has done quite a lot. One of the more famous examples was right when the ETF came out. We had this beautiful sideways range, and then we tested the top and we got rejected. We tested the bottom, and this is exactly what we're doing right now, more or less. And then we ended up recovering, and it actually took Bitcoin going significantly higher. Now, I'm not saying that that's going to happen here, but if you look at certain things, let's take a look at the Fear and Greed Index. I haven't actually looked at this in a long time. If this is real, 25, that makes more sense. When we're looking at kind of extreme fear readings like this, and more importantly, I think if I can step behind the microphone and tell you that I think Bitcoin does have a setup to move up, doesn't mean that it'll take it, but it does have a setup to move up. If I can tell you that and people are going to be upset at me for it, that's actually going to strengthen how I feel about this a lot, okay? I'm not in this business to agree with retail. I want to make this very, very clear, and neither should you be, okay? We're not here to agree with retail. We're here only to agree, first and foremost, with ourselves, and we can only do that if we're putting our right foot forward with our analysis, okay? If our analysis is flawed, then you can't really have faith in it. But if your analysis is solid and it's rooted in fact and it's realistic and it's grounded and it's certainly, above all, not emotional, then you can actually have a pretty good degree of certainty in what you say, and that's going to help you a lot with conviction and trades and stuff like that. So really, really cool stuff, and clearly something that Bitcoin has kind of done before. So reclaiming this range is a big deal. The fact that we've kind of gotten a little bit further than last time is a big deal. It definitely does not mean that the chance of a fake out is gone. I don't think that that's the case. I think that, there is still a pretty real chance of a fake out, because, if we measure it from the same kind of place, we are up by a little bit more than 3% now. But again, it's a market with a lot of fake outs, like I said. So, it's not something that I'm going to be relying on too heavily. But yeah, at the same time, if we can get up, then yeah, kind of reclaiming this range would be good. It's still entirely possible that we lose this level. Again, it's just all entirely contingent on Trump, right? Like, Trump could just wake up and, be pissed off at China or, some other country, and, it would all kind of, just come tumbling down. So, that's kind of the risk factor here. But I don't know, man. Like, I think, you guys, maybe not you, but, specifically the entire community has had quite an ample chance now to kind of, feel bad about the market and feel upset about Trump and cry over him, whatever else they want to do. That's fine. Everyone's kind of entitled to feel upset if they want to. But now I want to talk to you as a trader, okay? And you as a trader you do not give a fuck about what Trump is doing. It doesn't matter, okay? You will care about it to the extent that it might impact the markets. But if there's frustration seeping in, what are you doing here, man? Like, if there's frustration seeping in, then I don't, I'm not one to tell you what to do, but shit, like I said, I've spoken to a lot of traders over the years, and one of the most common things I've realized speaking to these traders, and I've said it to them to their face when I had to, every single time, is that sometimes people just shouldn't be trading, okay? Sometimes if you're getting emotional about it and it's because of a fucking president or anything else, you're clearly just on the wrong side of this spectrum as a trader, okay? As a trader, you're meant to stay much more detached than that. And if you can't do that because things are annoying you, then that's totally okay, okay? 99% plus of traders lose money. Do not contribute to that statistic if you can avoid it, okay? You'll be better off not doing that. I think this is really, really important, and I want to make it very clear with you. As a YouTuber, this is very, 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 very bad for business, okay? This is not the kind of thing that I should be saying if I was incentivized with making money here, but I hope that you can tell as a result of me saying this that this goes a little bit further than selfish, money desires, okay? This is very, very much so about keeping yourself safe rather than growing a YouTube channel to exorbitant numbers. Okay, I think that's really important. It's probably the reason that we've been stuck where we are for a while, and that's okay because integrity is much more expensive than 500,000 subscribers. So anyway, moving back to the chart. A lot of important kind of truth bombs we're dropping so far in this video, but we haven't actually said too much yet. So let's really just lock in for this analysis. If Bitcoin loses this level now without getting back up to 88, then the chance of sweeping this level gets much higher to me, and we're probably coming back down to the very low 70s or very high 60s at worst, I would say. I don't really see this dropping much more, and I think one of the reasons for that, I already covered this in the last video, but I do want to point this out again. It is this wedge, and there's a few people talking about it now as well. Actually, you can draw this in a couple different ways. I've seen it drawn in a few different ways, but I kind of like drawing it a little bit more like just like a classic kind of wedge, something a little bit like that. It looks pretty clear to me, right? I mean, like, this is kind of something that is having some sort of effect on the market. We might kind of be breaking out above it right now, right? So that creates a nice trade opportunity for bulls who might want to kind of go long off a support retest. And so this is actually directly contradicting what I said, by the way, because I said if it comes back down to this level, this could be pretty bad. So obviously this is where traders make money, right? You take the risk, and if you disagree with me, then you might get paid quite well. The chance of it kind of collapsing below the support now is a little bit lower because we've already recovered back above the previous high, and we've set a higher high now in this very short time frame. We're on the daily chart, but if we look at this on the hourly, the fact that we swept this high, it does reduce the chance that we collapse below this level, in my opinion, for the same reasons that I already described, right? From that psychological perspective, this gives traders a little bit more confidence to start bidding at those lower levels. So I do think that that's important, and I do think that that's something that traders should be kind of looking out for. And so yeah, it's a really interesting point in the market. Now, one thing that I think is much more interesting than all of that is the Bitcoin dominance chart. Okay, it's just so correct about this chart. Like, honestly, shout out to you guys that have been watching us since the beginning when this shit bottomed out, and I told you we're going up to like 70. I told you we're going up to 60. And I started talking about 70 as we got a little bit closer to 60 because it was clear that this shit just wasn't done. Obviously, very few people were able to digest these ideas here on this YouTube channel, but that's okay. That doesn't change reality, and reality is continuing to play out right in front of your eyes. This is, look, there's really not much else that can stop Bitcoin here, right? Like, I mean, if we look at a fixed range volume profile again, just kind of, trying to analyze what this range is telling us, we'll just kind of draw it from, basically around here to about here when we lost the range. And I just want to focus your attention on everything that happens above this yellow line right here. So, and actually everything happens above this yellow line right here. So, yellow box. So that's interesting. So yeah, a little bit of resistance right here, and then a little bit more higher up at about 68. 68, apparently, according to this, is going to be the strongest zone of resistance for Bitcoin, but that's still another 4% higher than where Bitcoin is right now with its dominance, and it would wipe these coins out if that happened. Here is Ethereum against Bitcoin, just looking bad, man, just looking bad. But I do have to say, and we're actually about to put a post about this inside of 4FliesGold. So if you want to get more free analysis from the team, then definitely check that out with this link in the description down below to join 4FliesGold. It's a free Telegram channel. You get more analysis around the clock, completely free of charge. And there's going to be a little bit more of a development on this posted in there very shortly. So by the time you're watching this, you'll probably see that in that channel. And just to kind of tease what you're going to be seeing there, I mean, one thing that I think is quite important to note is, for me, I'm looking for, as somebody that's got, to me, it's a serious amount of money in the markets. I want safer trades, right? Like, I'm not here to, bet on SafeMoon and, a bunch of other Solana meme coins, right? That's not really what I do. I've got, more respect for my capital, than somebody else who perhaps doesn't respect their capital so much that just apes into a bunch of bullshit. Hasn't worked out for you very well, most likely. For me, I need safer trades, and the reason that I think Ethereum is a safer trade is because it's now part of the Trump family crypto fund. And it's, I'm pretty sure it's also been named in some other like nice big official ways. Maybe not, but doesn't really matter. It's got a lot of backing. It's backed by very big people. I just don't see it going down to zero. And because I don't see it going down to zero, and because I see it just in a relentless downtrend that really has not had any relief since basically June of 2022, which is we're going back like 3 years now. I've been waiting 3 years for this shit, ladies and gents. Haven't clicked buy. I can't do it. I think we're basically there now. I think it's now at a point where it's really hard to lose money on this thing in, a 6 month to 2 year time horizon. I have no idea where it would fall along that time horizon. Maybe even less, maybe more. I don't know. But I think it's hard to lose money on this, at least compared to Bitcoin, right? Compared to the dollar, it's a little bit less clear, but I still think that's the same case. But against Bitcoin, I just don't see it dying. Even if XRP takes over Ethereum, which I think it will, I still think that Ethereum could bounce up quite well. So this is now where we're seeing a nice big asymmetry between risk and reward, which I think is definitely quite interesting. The chance of it dropping by half again is just too high, and we can talk about that a little bit later on in this video. But for now, I do want to continue on with the analysis here. So let's move back to Bitcoin here, and let's just take a look at this on a larger time frame again, just kind of zooming out a little bit, not focusing so much on this pattern right now, just looking at this chart for what it is, completely naked, no indicators, no tools on this chart drawn as well. And this is clearly a market that has been slowing down a little bit as it's been dropping toward a critical zone. Again, like I said, the fact that this lines up with the S&P 500 backtesting its previous all-time high over here, look at this beautiful backtest right here. Let's just drop a line right there. Absolutely beautiful. Hit the high over here and then retest it back down here. And just look at the time horizon, by the way, right? I want to point this out to you guys. I mean, this is, you know, a 1,200-day thing. It went from January of 2022 all the way to April of 2025. So again, you know, we're basically looking at over 3 years in this case. You know, and nobody's really talking about it. You know, there's nothing saying that we can't sweep this level again. It's just, you want to start becoming bullish as prices drop, right? You don't want to become bullish at market tops. You want to become bullish at market lows. And I think that's really, really important, because if you can't do that, then, you know, you're perpetually going to be buying at the highs and selling at the lows, right? And we don't want to be in that position, okay? So this approach helps us a little bit. It doesn't ensure us, because we can still be wrong, but it does, you know, at least move us in the right direction, where we're getting a little bit more comfortable taking risk in zones where, you know, emotions aside, you might expect support from a technical perspective. So I think that's pretty cool. You know, gold is just moving. Gold is setting a brand new all-time high right now. It's at 32.40 nearly. What did it top out at today? Yeah, 3,245 today is where it topped out. It is doing incredibly well, and of course the dollar by comparison has fallen off a cliff. So I'm a little bit surprised by this. Obviously, you know, this was Trump's election, this green line right here. And, you know, the dollar moved pretty hard after Trump was elected, because, you know, obviously, you know, you'd expect him to kind of really prioritize making the dollar quite strong again. But I don't know. It's a bit of a, you know, roundabout way to get there, if we're even going to get there. Probably, you know, we are going to end up getting there. There's 4 years left for Trump's term, right? So it's entirely possible that Trump can, you know, turn this around. There's, you know, a lot has happened in the last 4 years, right? I mean, this was when Biden got elected. So, you know, you really kind of have a lot of volatility for the dollar in a 4 year period. So, you know, I'm not writing anything off by any means, but it is still dropping by quite a bit. And I think that is one of the things that's helping Bitcoin right now, as it has, just as we're recording this video right now, pumped through $84,000. So definitely a very, very exciting point in the market. Now, looking at some of our altcoins, here is Trump right here at $8. It's not moving back up very well. So a little bit concerning, I guess, but very much in line with everything else that we're seeing, where altcoins are basically moving down by a lot more than Bitcoin is moving down by, which I think is I don't know. It's just something to be paying attention to right now. Like here's Cardano. I'm sorry. Here's Solana against Bitcoin. Now kind of getting ready to backtest some potential zones of resistance against Bitcoin. So this is what I'm saying, is that we could be kind of leading ourselves into a bear trap right now. Those of you that are kind of trading a little bit more trend based, especially on the shorter midterm trends, you're probably going to be quite bearish right now. You're going to be looking for opportunities to go short on this market, and there are some opportunities definitely starting to line up here. I mean, here's Solana against the dollar, and it is just brushing up against, key resistance levels right now. It's got some slightly better resistance up ahead by about 5%, and that's also totally doable. That only requires maybe an 85, 86K Bitcoin for some of these altcoins to reach, dangerous levels where I think, a lot of people are going to be looking to potentially exit, based on everything that's happened in this market. It just depends on the kind of fear that's floating around. It's obviously a very nuanced discussion. Here's Hype, by the way, which obviously had a lot of marketing power and is now actually doing quite well. This is actually a coin that I think could lead to a really, really nice buy, basically in this box right here at the low $12 kind of areas right here. This could be a pretty sweet level. I don't know if we're going to get it, but if we do get it, I think that's a level, depending on other things like the S&P 500 and Bitcoin, that is a level that I think would make a lot of sense to start kind of bidding a little bit as well. So that also makes sense to me. Let's take a look at Doge right here. It's sitting at 16 cents, also at some fairly dangerous resistance right now. A lot of these coins are in similar positions, of course, including Bitcoin. So it makes no surprise that we're seeing all of these kind of coins correlate with Bitcoin in terms of hitting important zones of resistance right now. It looks like alts are overall in a much worse place than Bitcoin, even in terms of their resistance levels. For Bitcoin, this is not really a big deal, right? Like this resistance level has only existed for about 38 days. The only trading Bitcoin ever did was basically inside of these 38 days, with the very, very small exception right here. And so, with all of that in mind, historically, it doesn't stretch out to be a particularly, strong zone of resistance, in my opinion. But, if you look at coins like Doge, that's not the case, right? For coins like Doge, it is actually quite a strong zone of resistance. This is a level that's been important on the market back here. This is a 92-day range, right? So we're already kind of more than double what we saw before. And this doesn't even account anything that we take into account anything that we did back in, 2021, 2022, where there were still so many reversals happening at this price level here. So, very, very bad situation, I think, for bulls right now if you are interested in these coins, because that's a 20% rally going straight into resistance. Again, I don't think it matters so much because it is more of a Bitcoin question, but put it this way, if Bitcoin does take a shit now, then these altcoins are going to have a lot of reasons to start dumping, and those reasons are going to come in very, very quickly potentially as well. So I do think that that's quite important to kind of take into account. Back to the S&P 500 though, just to kind of take a look at this, we are on the final week of trading for the S&P 500, final day of this week of trading. There's only 2 hours left in this weekly candle, and it's a very, very good weekly candle. I mean, from, like I said, from the low to the current price, it's up by 10%. To the high, it's up by 13.4%. If it closes here, and if it's able to hold this level at about 5250, 5300, then it might be done, right? It might. I'm not saying it is, but it could be, right? I mean, I think, like I said, we need to clear this with a little bit more headroom, but we kind of already did. It's going to be something that we kind of have to just wait and see, but I think it's definitely putting us in good posture for Monday if nothing significant changes over the next 2 hours, or even more so if this gets better over the next 2 hours until this weekly candle closes here. So again, really a very, very interesting kind of situation and setup in this market right now. And I do think that there's a chance for a little bit of a recovery. Now, obviously, this is going to, start seeping into politics again, because we are going to have to kind of look at what Trump is saying and stuff like that. And I just want to go ahead and see what Twitter is saying about all of that. Let's see what we got here. The 10-year note yield just convinced Trump to delay tariffs by 90 days, made the Fed ready to stabilize markets if needed, made Trump ready for a phone call with Xi. So yeah, basically a very sentiment-driven kind of reversal in the market by the looks of it. And probably, it's like I said, I posted a tweet about this, and you guys can follow my shit posting on Twitter if you're interested. But, more or less what I said is, the US kind of stands more independently for all of its production needs, which is kind of starting to happen now. There are a lot of US manufacturers that are now turning inward to domestic kind of solutions for their production. And, it totally makes sense, from a lot of different reasons. I've been discussing the kind of theory ideas of that over these last videos and live streams as well. And, one of my big ideas here is, obviously, they want the factories back, right, in the United States. And it's not, I don't think it's necessarily just for jobs. I think it's also just, when automation gets to a point where people won't be working in factories anymore, or maybe it'll go from, 1,000 people in a given factory down to, 50 or 20, which is definitely, the kind of change that AI can make for us. At that point, it's going to make a lot more sense to have all that manufacturing being domestic as well for America. So, again, it's really just confirming, what I was expecting, which is that this shakeup puts the United States in a better position moving forward. But obviously there's still, a little bit more pain, even if Trump's idea goes through correctly, because it might not. It could just completely fail. But if it does go through completely correctly, there is still probably going to be a little bit of pain on this path. But it looks like some of the main things have already been starting to recover. Again, it's just so turbulent. This can get thrown off, at any point because of the politics going on in the world right now. But, as a trader, that's not really something that you want to, psych yourself out about too much, because, I mean, you're just going to have a stop loss, right? And if you've got a stop loss at break even, then who cares? Who cares what happened? You're safe. You're protected. Let's see what it says over here. Top Fed official says that the Federal Reserve is ready to help stabilize the market if needed. So, that's... yeah, there we go. There's a little bit. Oh, and that's Arthur Hayes. Okay, well, that's a pretty strong buy signal as well, don't you think? So that seems pretty cool. I don't know. I wouldn't want to kind of get too attached to these ideas just yet. But still definitely interesting. Let's see what else we got here. Not a whole lot that's super, super relevant. Absolutely ready, apparently. Okay, well, that's interesting. Jim Cramer says the market is about to explode. Well, okay. Is he still like the counter signal that he used to be? I don't know if he's still as bad. He's still extremely bad, but is he as bad? Let me know. But yeah, look, we're basically at the stage where a reversal might kind of start becoming possible. And we're just gonna have to continue to watch this and see how it goes. So with that, ladies and gents, I hope you've enjoyed this video. You know what to do. If you have, subscribe, hit the like, smash that bell icon and all that good stuff. And I might do a live stream later on today, so double check, of course, that you do have that bell icon checked so that you do get notified if that live stream does happen. It really just depends on volatility. If there's more volatility later on in the next hour or so, then I might just come back for another live stream. So I'll see you there if I do, and if not, I will see you in the comment section. Take it easy, guys. Cheers.